Investors and traders, welcome to the channel Market Chart Pattern. Today is 13th of August 2023, and I believe everyone is having a great weekend. In this video segment, we are going to take a look at the key US stock indices, as we always do for this video segment. We will take a look at the SP 500, both the cash index and also the shorter term E-mini futures, which is with the ticker symbol ES. We will take a look at the NASDAQ 100 futures, ticker symbol NQ. We will also take a look at the Dow Jones Industrial Average by taking a look at the YM futures, and also will cover the smaller cap Russell 2000 by taking a look at their futures contract. And towards the end of the video, time permitting, I will also try to cover and have a look at the US debt markets by taking a look at the US Treasury markets bond futures. So that's going to be the long bond futures, which is the 30-year duration future chart, and also we'll take a look at the 10-year Treasury note based on futures. Okay, so this video is for educational purposes only, and it is not a financial advice. What we are looking at is the weekly chart of the S&P 500 index. This is the cash chart, the cash index chart, and here something which we have been looking at on the daily chart. I want to show and represent that on the weekly chart as well. The longer term subscribers to the channel will know that we were looking at the level coming in at around 45.30, which was the 78.6% Fibonacci retracement from the highs of 3rd of June 2022 to the lows which came in on the 13th of October 2022. Now what the market has done is it has retraced in this rally 78.6% retracement of from all the highs and to the lows. In fact, went a little bit higher, and we can actually come up with some really interesting pattern formations. So we have a ABCD pattern, or 1-to-1 projection, highlighted by this red line. It came around 45.15. We of course have the 78.6% Fibonacci retracement, and we also have a 1.272 expansion of this swing. So let me try to draw this swing like this one, and that came around 45.49, roughly speaking 45.50. And what we have seen over the course of a couple of weeks just gone by, that the market has found resistance from this level and it has pulled back. This is what we were kind of expecting, because we have had a confluence of these Fibonacci ratios and patterns coming together, and usually when that happens we pay close attention to, because that means that that area could be a, depending upon the situation, a strong resistance or support level, and we pay attention to that. So we are going to go down one time frame and take a look at this on the daily chart. So in the daily chart, this is the chart we were looking at. We have labeled this as a 1-to-1 projection ABCD right here, and what we were looking at was that if indeed there's going to be a pullback, in fact we were initially looking at a situation that if the market is strong and strong enough that on a consecutive daily closing basis the market is able to strongly close above the 78.6% Fibonacci retracements, then it could in fact go and challenge the highs, these all-time highs coming from January the 4th or the 3rd 2022. And if it is not, then if it begins to close below this, then we could anticipate a pullback. And what we were watching for was, okay, if there is going to be a pullback, what sort of what to expect or anticipate. One of the things that we like to take a look at is the concept of symmetry. So we looked at in this CD leg how much were the pullbacks when the pullbacks took place, and if we just draw this and try to project this, this is where the market pretty much went. On last Friday it closed, it actually went below this a little bit, but has closed right pretty much at this level, and it was also a bullish trending day because we had a white candle, which means that the close was above the close for the day was above the open, and that was the indication. And it also came right down towards very close to the 61.8% Fibonacci retracement of this swing. So if we were to draw this is what we get. We came very close to it. Now the cash index S&P 500 is something which I like to use for longer term. It's the cash market, so we should of course always pay attention to it. However, for shorter term moves, ES or the futures, E-mini futures, they work a little bit better in my opinion and my perspective. So what we are going to do is we are actually also going to take a look at that market. So this is the S&P 500 E-mini futures. Our target was met a long time ago, and I'm going to remove that part. And what we have been watching for was after it broke this trend line, similar kind of analysis. We were watching for the market to kind of repeat itself, and if we are going to get a bigger correction, this is going to be our first indication, because this symmetry will get broken. So far it hasn't happened, and what has in fact taken place is the market closed or touched right at the 61.8% Fibonacci retracement right here. So if we were to draw it like this, there you go, right at this 61.8% Fibonacci retracement, and it just closed pretty much unchanged. Let me take a look again. So open, yeah, it's very close to being unchanged, but you know, if we get a follow through to the upside next Monday, that's gonna be a positive sign, and we could perhaps see some sort of a bounce coming in. I've also done a video about the key US tech stocks that we follow, and a number of those stocks are also closer to or forming patterns which are closer to some sort of a support. So perhaps that could also relate to some at least a bounce to be expected sometime in the next week in the major averages. So this is what we are watching here. If it begins to close below this, then we will reevaluate, and on the S&P 500 cash index we have further targets towards the downside as well. But here in our previous analysis we were also looking at 4,326 if this, especially the 78.6% Fibonacci retracement, is taken to the downside. Let's take a look at the NQ. So this is the NASDAQ 100 chart for NASDAQ 100 E-mini futures chart. Here again, similar situation, that the market actually in this case went quite a bit above our target of this, the levels that we were watching for, which were right towards the 78.6% Fibonacci retracement, coming in at around 15,400 level, and we also had this CD leg shown in black color a little bit above that. Market went quite a bit above this, about 600 points, and what we have seen is that a pullback being taken place. And again, similar to our analysis for the S&P 500, if we just look at the market symmetry, we have had a correction of this much in the past. So if we try to project it from here, we are very close to that level. And then what we also have is a bigger correction, this BC leg here, that could in fact take us down to around 14,470. So one of the key things we are also watching is the smaller swing right here. This closed, or this just came right at the 78.6% Fibonacci retracement. So in the E-mini ES futures we have seen 61.8%, and in the NASDAQ 100 we are looking at the 78.6% Fibonacci retracement. So these indices on shorter term are at levels which could be construed as support levels, and perhaps we could see some sort of a rally take place in next week in fairly oversold conditions, in my opinion. Now if we just move to the weekly chart, this is how the chart looks like. Here again, what we are looking at is we have the 1.618 expansion, which came in around 15,800 level, and we had the 78.6% Fibonacci retracement. So thereabouts in that region, we have seen this index moving into and then finding resistance. And over the course of quite a few weeks, 1, 2, 1, 2, 3, 4, it's been nearly about a month, we have seen some pullback or the market moving lower. Now, if you look at just the rally taking place from the October of 2022, the momentum is very strong. It's pretty strong momentum. Look where the 200 week moving averages, where the 20 week moving averages, and it's quite possible that the markets get some sort of a pullback, especially during the summer months. In fact, there is a possibility we could get quite a sharp pullback as well. Some of this activity in some respect actually also remind me of summer of 2015, where during the month of August, also because of holidays, a lot of traders are on holidays, a Federal Reserve on holidays, the interest rate decision will come in September. We have had in the 2015 August a sharp pullback. In fact, you can go back and look at the charts. If we have the time, we'll try to do that. Such a situation, could it happen? Perhaps it could. We should be prepared. Now, it may or may not happen. I do not know. But what we do know is that the markets needs to move higher and take these levels out, which are acting as resistance, and these Fibonacci levels need to be taken out convincingly to the upside for the market to go and tackle the all-time highs coming in from here, from November of 2021, and move higher. So we'll keep you posted. Also, this again goes back to what we're looking at on the daily chart, the market symmetry concept. Here we projected from here, it comes very close to where the 20-week moving average is. In fact, over the course of the next week, perhaps the moving average could actually catch up with this. Now, let's take a look at the Dow Jones. So this is the weekly chart of the Dow Jones E-mini Dow Jones futures. We have to look at each and every market on its own, because different markets are doing different things. They have different levels, different patterns, and we have to watch all these markets and then try to make an understanding of what the overall picture is. Now, the NASDAQ 100 or the tech stocks in 2022, they were the ones which were leading to the downside, and in 2023, in the rally, NASDAQ has been the better performer in the major indices such as SP500. And what we are looking at in Dow Jones E-mini futures is a little different kind of a pattern. So if you look at the candle formations, what we have seen on a weekly chart in NASDAQ, we have seen quite a few weeks of pullback. S&P 500, similar story, but in Dow Jones, it has completed a pattern which I'll show you on the daily chart, and then we have just had a very shallow kind of a pullback. And where is this pullback? Right at the 38.2% Fibonacci retracement right here, whereas the pullback has been to 78.6% of the respective swing in NASDAQ at 100 and 61.8% in the ES E-mini futures of their respective similar kind of a swing. So what it shows is that that Dow Jones is actually stronger, and usually when a stock or commodity retraces down to about 38.2%, depending upon whether it's on the bullish side or on the bearish side, it usually indicates a stronger trending market. So if that is all we are getting in Dow Jones, then we could have a bit of a rally come in, and that's going to be good for the stocks which are part of the Dow Jones Industrial Complex. So this is a very interesting development, that if we look at the NQs, the NASDAQ 100, then we look at the the E-mini S&P 500 futures, what they have done over the course of past few weeks, and where the Dow Jones is, it's a different kind of feedback that we get from the market. Now let's move over to the Russell 2000. This is the small cap. The small cap have just been trading in a range for a long time, and here they're just kind of testing the upper boundary. Not a very exciting market from a trading perspective, but it's a key market as well, because smaller cap stocks, they are more sensitive to interest rate movements because of their balance sheet size. So we need to be keeping an eye on it. And also from a trading perspective, Russell 2000 is an index which is traded quite a bit as well, so that it has shorter term influences. So we need to be watching this, although not a very exciting market for quite some time. And just moving to the daily chart, our pattern formations in fact worked very well on it. So we had this ABCD 1-to-1 projection, and we saw just the price collapse right into the 78.6% Fibonacci retracement, and then it went into a sideways. We had this box. We were watching for this 1852. That was the 38.2% Fibonacci retracement, and our analysis told us if the market convincingly moves above it, then the chances are it's going to go and move higher, and this is what the market did. And now what it is doing is it's challenging the highs or structural resistance coming in from the left hand side. So it's just testing the upper boundary of the trading range, which we have seen on the weekly chart. Now let's move to the treasury bond futures market. So here, this is the 30-year treasury bond futures. It's also known as the long bond because of its duration. 30 years, pretty long. And if you read in the press, or if you even go and have a look on YouTube, there's a lot of talk about the yield curve inversion. And so what is that in the yield curve inversion? That is the longer end of the curve which is getting inverted because of the what is happening with the yields there. From a pattern perspective and price action, we know that the market bearish symmetry is still in place. So whenever there has been a rally of about this much, the market has actually broken to the downside. And it was when it reached these levels, just market went into trading range for a long time. And the last video which we did, I think we were getting more bullish around here because we were around here, because we were anticipating that perhaps it could be a possible double bottom because of the 61.8% Fibonacci retracement here. But this is not how it panned out, and the market actually broke down. And I believe there was some news about the credit rating coming in from one of these credit rating agencies that might have actually caused more activity in this market. So what we are looking at is this market moving lower because the yield and the price in the bonds are inversely related, which means that if the price is moving lower, then the yields are moving higher, which means the interest rates are moving higher in these instruments. From a pattern perspective, I'm not going to draw a pattern here, but there is quite a bit possibility that if it rallies, maybe it rallies up to this trend line here. It's got 20-day moving average here. It found resistance already from this level. Maybe it just goes and touch this level coming in from 25th of October 2022. Let's take a quick look at the 10-year treasury note futures as well. Similar pattern, bearish symmetry is in place. This one is a little bit different pattern formation, very ever slightly, and the chances are maybe it just goes and also tackle the lows coming in from the 21st of October 2022. Price move lower in bonds. This indicates yields going higher. So this is what we are looking at. These are the levels that we are watching in the key stock US stock indices, and the kind of levels that we should be watching for in terms of support. Already mentioned the key resistance level from where the markets have gone into some sort of a pullback mode for now. And if you like our video, how we do the analysis, then please do hit the like button, and thank you very much for watching the video, and I wish everyone is having a great weekend, and speak to you guys soon. Thank you.